How do I determine my investment risk tolerance? Have you ever wondered how much risk you can handle when it comes to your investments? Understanding your investment risk tolerance is key to making smart financial choices. Let's break it down step by step. First, what does risk tolerance really mean? It reflects how much potential loss you are willing to accept in exchange for the chance of higher returns. This is not just about your feelings. It also involves your financial ability to absorb losses without affecting your overall security. Next, take a close look at your financial situation. This includes your income, expenses, savings, debts, and emergency funds. Knowing where you stand financially helps you figure out how much risk you can take on without jeopardizing your life goals. Now think about your investment time horizon. How long do you plan to keep your money invested? If you have a longer time frame, you might be more comfortable taking on higher risks, as you have time to recover from any market downturns. On the other hand, if you need your money soon, a conservative approach is often better. Your financial goals also play a big role. Are you saving for a house, your child's education, or retirement? Each goal has its own timeline and importance, which can influence how much risk you should be willing to take. Aligning your risk tolerance with your goals is essential for successful investing. Another important factor is your emotional comfort with risk. How do you feel about market fluctuations? Some people can handle significant ups and downs, while others prefer steady and predictable returns. Many banks and credit unions offer questionnaires to help you assess your comfort level with risk. It's also helpful to understand different risk profiles. A conservative investor prioritizes capital preservation and prefers stable investments like certificates of deposit or government bonds. A moderate investor seeks a balance between growth and stability, often using a mix of stocks and bonds. An aggressive investor is willing to accept high volatility for the chance of higher long-term returns, focusing mainly on stocks or real estate. Many banks and credit unions provide risk assessment tools or consultations with financial advisors to help you identify your risk profile accurately. These tools take into account your financial situation, goals, and emotional tolerance to give you a clearer picture. Lastly, remember that risk tolerance is not set in stone. Your financial situation, goals, or market conditions can change, so it's wise to reassess your investment approach regularly. When you work with your bank or credit union, they can guide you through this process with personalized advice and risk assessment tools. They offer a range of investment products suited to different risk levels, from low-risk savings accounts to diversified mutual funds and stock portfolios. Understanding your risk tolerance helps ensure that your investments align with your financial goals and comfort level, allowing you to make informed decisions without unnecessary stress.